Good morning, stock investors and stock traders. We are on a Monday morning, the week of Thanksgiving. Hopefully, you're going to have a nice week, have some time off to spend with family and friends, and safe travels if you're traveling this week. We were going to talk about stocks on this live stream. I am joined by my colleague, Daryl. How are you doing, Daryl?
I'm doing great, Victor. Good to be here. Thank you for having me.
Great to have you. Great to be streaming with you. On this stream, we're going to look at stocks and we look at them from two perspectives. Fundamental analysis, looking at the fundamentals of the business, looking at their financials to see what kind of cash flows that company is going to produce in the future, what kind of profits, putting a forecast together and trying to arrive at an intrinsic value, a net present value of those cash flows and profits, and comparing what we think per share that stock is worth to the current stock price to see if it's a good opportunity. Maybe the stock market is pricing a stock too low due to stories and maybe some stories that are not all that critical and expecting that stock over time to rise. Now, when will it rise? My colleague Daryl looks at technical analysis, looking at the charts, seeing what kind of trends are in those charts so that we could see at what point might that stock begin to move either up or down. So that's how we handle it. I think it's a pretty good review of a stock. You get both things. Looks like we've got Herdo already on the stream. Good morning. Hopefully you are doing well, Herdo. Thanks for joining. It looks like this morning we are going to see a positive open. We're going to open in the green. We're about 30 minutes from the open. It looked like Hong Kong was having a pretty good rally. They already closed. They're like 12 hours or something ahead of us. So they already closed their stock market for the day. And Europe is up a little bit. So it looks like we're going to have a positive rise. Looks like Peter's on. Good morning, Peter. I hope you are doing well. And looking at other things going on, we've seen a rotation of stocks over the last couple of weeks, which I think is a positive thing, right? Some stocks were really getting too euphoric. They were just going up and up and up. And some of these stocks were a little sketchy. They didn't have big businesses, solid businesses, but they kept rising. So now we're seeing that investors are looking at fundamentals, are considering, well, maybe that company's supposed to make money in 3 years, but maybe that's too risky. And I think that's a rational thought. As we look at the week, I think it's going to be lower volumes because we have that Thanksgiving holiday. A lot of professional investors are taking it easy this week, so the volumes are going to be lower. Now, I don't know if we're going to go higher or we're going to go lower. I would probably guess we're going to go lower because it's been a little bit negative over the last couple of weeks. But what are you thinking, Daryl? What do you think is going to happen this week?
I'm expecting to see some positive price action this week, and next week tend to be fairly positive on average. Most of the professional traders are already at the Hamptons this week. and and so mostly it's going to be retail traders. I expect the volume to be quite a bit lighter, but I expect a little bit of positive reaction to prices over the next 2 weeks, and then the following week could be a little bit challenging. That's when mutual funds start rebalancing their portfolios and preparing to make their distributions for the year end. So that first week of December can always be a bit challenging.
Well, those professional investors can go to the Hamptons, but they should be working because this year, retail investors, probably a bunch of you that are joining this stream, have been winning, have been performing great, outperforming most famous super investors, professional investors, and we keep getting smarter and more capable. So if you're an individual investor that manages your own portfolio, good for you. You're going to keep getting wiser, better, and wealthier because you're going to have the knowledge as opposed to just parking your money with some person that maybe takes the week off and goes to the Hamptons to spend the 2% they charge you to manage your money and other fees that come with it. So good job, individual investors. Great job in 2025. So
And
we've seen,
when you get a moment, let's look at the RPG chart because you mentioned rotation.
let's do that now.
Okay. So let me remind everybody how this works. This is usually using weekly data.
This looks like it should be an art piece in a gallery. So what is this?
Exactly. Yeah. So it's benchmarking to the SPX. It's looking at 1 year's worth of data in a weekly data. So it takes the weekly close. So Friday the 21st, this should be up to date as of that point. I have the tail length as 10 weeks. So, excuse me. So this is where, for instance, XLV closed on Friday. Here's 1 week before, 2 weeks, 3 weeks. So this is the tail. It goes out 10 weeks. And one of the interesting things that you can do with this is actually move it around. So we can slide it back to like April, right before April. We can see that healthcare was doing pretty well then. Materials, real estate, staples, energy, utilities, industrials. XLK was doing the worst at that particular time, right before April. You remember they had the sell off in February and March. Here's the financials, here's communications, and here's discretionary. So then you can just move it forward and you can see what was outperforming in April. So XLK had moved into the lagging quadrant, and all of these defensive stocks, more defensive, were in the leading quadrant. So then you can just kind of watch it as you go through the year.
Wow.
We got to a point to where it was all about tech,
Yeah.
all about industrials and discretionary, and all those defensive stocks went by the wayside. So if they're in this quadrant, that means they have a good relative strength compared to the SPX. And if it's below the line, then it has less momentum than the SPX. If it's above the line, it's more momentum. So you end up with strong relative strength, strong momentum in this quadrant. And then you can figure out the rest from there. So this is leading. When it gets into here, it's weakening. When it's lagging the SPX, and then you can see as they move here, they're improving. So we'll just keep going. You can actually watch and visualize the rotation. We've all been talking about how healthcare has been doing so well lately, and you can actually visualize and see where it is. It's not in the leading quadrant yet, but it's looks like it's going to cross over into the leading quadrant anytime. And XLK, even though it's been weakening, it's still in positive relative strength.
Very interesting. And speaking of healthcare, holy smokes, what's going on in healthcare today? Let me show you a few stocks.
Okay.
Starting with Oscar, up 20.92% in the pre-market. What is going on, folks? That's a That's a phenomenal day. 21. And then Unitedhealth up 2%. And I think you said CNC, right?
Yep.
So CNC. So what's going on in healthcare this morning? Centene up
President
8.5.
President Trump has some report out on how he's going to reduce the cost of healthcare. So it took kind of a hit with the ADA, or not the ADA, the ACA subsidies.
Yeah.
And yeah, I guess now he's coming out with something else. So we'll have to see what
So
that
instead
is
of the
today.
subsidies, we're going to do this other program.
Something, I guess. I'll have to see what it's about. I just saw the headline.
Well, geez, man. I'm okay with Oscar going up 21%. I own Oscar. And I'm okay with Unitedhealth going up. It looks like our friends over at Novo Nordisk are crashing and burning once again. This is like that car you buy that's always in the shop. That's Novo Nordisk. It's in the shop all the time. You're like, geez, man, what gives? I'm taking the bus every day, riding Ubers, but I own a car and it's always in the shop. It's down 10%. Holy smokes. And this is a stock that's beaten down after being beaten down. Incredible. So Eli Lilly's been a very good performing stock. I would say that's their peer. And Novo Nordisk has just been crashing and burning. All right. So big stuff happening in healthcare. Looks like it's a good morning for Oscar and Kurt. He's rooting for Oscar to go up 21%. I like the number 21. It's blackjack. It's a good number in blackjack. Molina Healthcare, Oscar Health. So Molina Healthcare is probably rocketing up. And what's interesting is over the weekend, I did a famous super investor review, and the famous Michael Burry came in last place, and he owned Molina Healthcare. And I got to let me see if, while you're presenting, I'll see if the rise of Molina Healthcare is going to help Michael Burry get out of the bottom rank and move up the ranks, because he had 3 positions and one of them was Molina. Man, so wow, man, what a nice week. Well, if we could just stick to that gain, I'll be a happy camper on Oscar, because I've been Oscar Health has not been an easy stock to follow, right? If you're an investor, up, down, up, down, up, down, and we're sold off here. Maybe if you wouldn't mind taking a look at Oscar. Let's look at Oscar, and we'll look at Unitedhealth if you don't mind, and then we'll move over to Meta. Oscar Health has been sold off for the last month and a half, pretty harshly, from $22.47 down to $13.48. So that's quite a haircut. 33%. Whew. Holy smokes. So I held my shares. I continue to think, these guys are just, when you show me fundamentally that you're growing your business, you're operating in a way where more customers, and they're selling to individuals and small businesses, more customers are coming to your company saying, I want to buy my healthcare from you. You're doing something that's valuable. You're building a more valuable enterprise, a more valuable company and stock. That's what that top line growth is telling me. And they provide cash flow. And yes, the stories are quite threatening to Oscar Health. Removing the subsidy to the Affordable Care Act, got it. But people are going to need insurance. We need insurance. We need health insurance, right? I just renewed my health insurance. It's not cheap, but it's a necessity. So I continue to believe that it was a good hold. It was going to be violently volatile. Analysts think it's fairly priced. And there is some analysts that are at 17, some analysts are 11. They believe that there's going to be a pullback in growth, but they're outperforming this number. I'm not quite sure why they're hanging on to 33.8, and they're expecting, I guess, a bad fourth quarter. But I think they're going to outperform this forecast. And today's news may be evidence that, hey, the government can't let, let's call it, tens of millions of people lose their health insurance. That would be really bad. Um, I think politicians would lose a lot of votes. A lot of people would be angry. Like, what gives? I need health insurance for myself, my family, and it got too expensive. So I think working things out is going to help Oscar Health. I think this forecast is going to change quite quickly. So I like what I'm seeing with Oscar overall. It's going to be volatile. It's not going to be a smooth ride. It's not going to be like my Kroger stock. Man, that thing just kind of glides up, keeps going up a little bit. No, this one's going to be like up 21% on a Monday, down 20% on a Friday. so put on your chin strap because it's going to be a contact sport when it comes to Oscar Health. But overall, when I value the company based on their fundamentals, I see a steep discount. And as Oscar establishes themselves as a legit player, like I'm not going to say United Healthcare, but going towards being so legitimate like United Healthcare, this stock's going to be worth a lot more. If you look at their market cap, 3.3 billion, that's nothing. They could end up at 20 billion, and I'd be a happy camper. I'd be 6 bagging the stock, 7 bagging the stock, going, hoo-hoo, go Oscar Health. And I think it could happen. What are you seeing for Oscar Health? Can you explain why they're so darn volatile?
I don't know if I'll be able to explain that part, but we can get some trend lines on here and see where things are. So looks like they IPO'd in 2021, and we drew this bottom support resistance line probably 2 months ago. So we drew that because it was touching that point in 25 March of 2024. So it came down and tested it as resistance after breaking above it in February. It came and tested it again in November of 2024, December of 2024, February the 10th. Broke through it during the April tariff announcement. So I disregard that for most stocks that I look at because it was an anomaly. So it came down and tested it again on the 10th of June of this year and tested it again on the 24th of July. And then I have this upper line, which I just added. So this one's been there for at least a couple of months.
Mm-hmm.
This one I just added just now just to see what the high points have been. This one was tested and was rejected in May. The 19th of September of this year, failed again in June of this year, and once again in October of this year. So let's go back to just a 1-year view. Also, a couple of months ago, we drew this trend line, which was positive. It broke out above that trend line back in August, came back and tested it several times, about 5 times it looks like. And then finally it broke down and failed to hold that trend line. But look where it's at on Friday. It closed below that lower support line on Thursday, came back and tested it. Looks like it was a bit of resistance because it stalled there. But today it looks like we're going to open right around 16, which would be where the 200-day is currently sitting, and the 20-day is coming down to meet that 200-day. So just based on this trend line, Thursday or Friday would have been a really good time to buy. I had no idea what was going to happen this morning, but just using this trend line, which I do quite a bit, if it hits a really solid support, that's usually a good time to buy because your risk is pretty low. It's probably not going to go too much lower than that. And even in April, it only went down. It was 15% below that. But
Yeah.
I mean, considering what your upside to that upper support line, it was 67%. So your risk to reward ratio, even in April at the bottom, was still really good. So,
Incredible.
yeah, this is telling me Friday would have been a really great. This is not one that I own, so I didn't add to it or buy it or anything because it doesn't really fit into my strategy. But just looking at the chart, I mean, it tells me it was a really good time to buy.
Now, I didn't buy Friday, but I bought shares when we saw that nice drop on the 18th of November.
Yep.
And I may have bought shares on Thursday as well, but I don't recall. But Friday, man, looks like a
Well,
real good move for.
if you bought them on Thursday, I mean, from a technical point of view, that was a good choice.
Yeah. So that's Oscar. It looks like Unitedhealth is catching a bid, and it's done okay for the 1 month. Well, it hasn't done okay. For some reason, Unitedhealth, was doing well for a while, picking itself up from the August lows, and it rallied higher. We found out that a bunch of these famous investors were getting into Unitedhealth: Michael Burry, Warren Buffett, David Tepper. I mean, I could go down the list of these like really good investors that were like, hey, Unitedhealth is way too low priced. And they caught a nice rally, but then over the last month, it really faded. I think part of it was the government reopened without the Affordable Care Act being funded for subsidies. I think that put downward pressure on the healthcare space, the health insurers. But now that the president's going to announce, hey, this is how we're going to enable people to buy health insurance, is what I imagine the punchline is going to be. United Healthcare is catching a bid, and hopefully it goes to rise. It continues to rise. The stock did have a couple good days, especially as we ended the week. I did notice that it had a couple positive days, so that looks good. Overall, United Health is a nicely discounted stock. It's discounted by 39%, in my opinion. Their medical loss ratio, which is something you want to keep an eye on, is 89.9%. So they're paying close to 90% of they get $100 of policies, they pay out $90 in benefits. And they want to keep that ratio, 90% or lower. So that's really important. So these guys are operating well. It's a solid business. I really like United Healthcare. I think it's a solid culture over at United Healthcare. I know that some people are always going to be kind of upset with health insurance companies because they're dealing with a medical issue at home, right? With somebody they care about deeply. So if somebody says, send me another form, and I could tell you firsthand that my wife, bless her heart, she deals with this stuff. She has to resubmit some forms sometimes when one of our sons or somebody in the family has to get healthcare, and that could get frustrating. So I get that, but I think some of that anger got a little overdone in toward the end of 2024, and I think the health insurance companies could do a little bit better job, maybe communicating and streamlining their process. Maybe AI is going to help us out there. We'll see. What are you seeing for United Healthcare?
We've looked at this one many times. You can see my annotations of some of the news events that drove the price either down. These lower ones are all things that, three of the lower ones are what drove it lower. The 13F filings drove it higher, and this news on their membership being 4-star or greater, 78% was a positive driver. So I originally had this downtrend line because I was buying all in here along with Warren Buffett. I didn't know that until a little bit later, but we were buying this together. Took another big drop, so it was rejected at that trend line, but did finally come out and break above it. Leveled out for a bit, and then we ended up with another trend line. It didn't stay below that very long and finally broke out above that. And came up and tested this 38.2% Fibonacci level, which was a resistance line. And then we ended up drawing the resistance line, and it's come back and tested this one 2 additional times. So this looks like a pretty solid resistance line. The 38.2 Fibonacci retracement also happens to align pretty closely with the downsloping 200-day moving average. And all of last week, when we were streaming in the week prior, I was telling everyone that 312 would be a really good level. I actually had in an order on Thursday at around 312, and it never got executed. It jumped up to 319, I think, for the high of the next day. Yep, it closed at 319. Today we're going to close at around, or open at around 325, I think is the price. So we're still going to be below this downward sloping trend line. And unless something big happens with this announcement today, I suspect this is going to continue to be resistance, and we'll probably have some more opportunities in this 315 or so up to this resistance line, 325. I think we'll have some opportunities to buy here before the next big breakout.
Very good. Thank you, sir. All right. So we covered healthcare. It looks like the market's going to open in 1 minute. The other stock we wanted to cover was Meta. And let me welcome Tomas. Good to see you. I'm giving it some thought on which small cap I want to talk about. And I was thinking maybe I'll talk about 3. So give me a few minutes and I'll get to that. And of course, Mike, you've been all over the chat. We need to all chip in a few bucks. Looks like you can have some free lunches coming your way, Daryl.
Yeah.
You just tell everyone, hey, there's about a 20% pop in healthcare coming in a trading day. If you can give us that, I think
I can't predict that, but I can tell you when a good time to buy is usually.
Well, you might get some free lunches anyway. We'll
Yeah.
see. Nichix, good to see you, buddy. And if you'd like me to take a look at that stock, just buy a $5 super chat or become a member. I've seen you on the stream before. It is great to have you. And yeah, Mike, you're all over Oscar. Happy about that. Molina Health. Awesome. All right. Again, good morning, Kirk. Good morning, Herdo. All right, so let's keep moving and get into Meta. The stock market has opened. Looks like Meta's having a decent open here, but they've had a horrible month. They came out with their earnings and said, hey, we were spending a little too much money on, actually, we're spending a lot too much money on the data center. We're going to spend like 75 billion. And the market said, yeah, we don't like that. Thumbs down. That's not a good idea. Show us some real life revenue, and then we'll let you spend whatever you want. Like our friends over at Google,
Just
they
hit
are
an
not
all-time high.
they're not spending as much, but they have, talk about being loaded in the AI side. They just came out with Gemini 3, very well received. I have a 21-year-old, and he willing to acknowledge that when it comes to AI, he has, I'm going to call it, better vision for the future. And he's more, I think, creative and accepting of, hey, all these things are going to move to AI, where I'm like, I'm the old guy in the picture. I'm like, well, I don't know that we're going to move that fast, but when my 21-year-old that's like all over OpenAI comes to me and says, whoa, the Gemini model is really good. I'm like, whoa, okay, it must be really good. And Meta, I think they got to be careful with AI. But overall, what was lost? What was lost in the wash was that this massive 200 billion plus annual revenue company, 200 billion, okay, grew by 26%. They accelerated their growth. That was lost. It's like, all right, hold on a second. This business grew that fast? Yeah. It grew by, it's going to be growing by like $50 billion a year. So that was lost. That was kind of, oops, So hopefully our friends at Meta are like collecting themselves, going, okay, the market wants us to pump the brakes on CapEx. Analysts think it's highly discounted. I think they're highly discounted. And they're going to keep growing. They're going to become a $314 billion revenue company. They just keep getting bigger, making more money, making more cash flow. Their margins are 85% gross margins. Sign me up. I've been buying Meta stock left and right. Just about every day I've been buying more shares. And because I've seen this movie before, it's like Star Wars. I'll see every single Star Wars. It's not like the Star Wars sequels are good. It's not like some of these movies that, you see the first one and the other ones are not as good. Well, Star Wars, that's a really good one. So the sell off on Meta, I think is a good one too. I think if the market wants to sell off Meta and give me a discount, I'm good. Give me some popcorn, some licorice, and I'm buying Meta. I'm buying Meta when it sells off, because the problems that, hey, they're spending too much capital, that's fixable. It's not like, if your problem is your biggest competitor is taking market share away from you, that's really hard to fix, because your competitor is just going to keep working hard with good ideas, trying to take more share away from you. But instead, we're seeing Meta take share from everybody else. So it's a good opportunity for me. And I've been buying shares of Meta. Glad I was doing it. What are you seeing with Meta?
Okay, so yesterday I put out a video on Meta, so if you want all the details, you can look there. But they also came down and tested a support level last week, and they are starting to rise. Looks like the 5-day could start turning over here pretty quickly. So I just bought some more shares of Meta just a few seconds ago.
Whoa.
Yep, I think it's at a good price. I have a stop loss at 576, and I tell you in the video how I calculated that and ended up at that 576 value. If it does fail this support level, then the next level of support will be about 529 based on where I place these two levels. The one thing I'm pretty excited about right here is if you look at the PPO, we are getting ready to have a bullish crossover. Okay. The RSI is very, very low right now. It is way oversold, but we are getting ready to have a bullish crossover. And if you already watched my video, you know what I'm getting ready to say, because look what happened the last time we had a bullish crossover in Meta. It was way
Rock and
back
roll
here.
time.
Yep, right around this support level. So my secondary support level, and we're already above here. So I think we're getting ready to have some positive things happen for Meta, but I do have my stop loss set at 576. I will be out if it hits that, and I'll just await things to settle down before I get back in. So Meta's looking really good right now after a couple of warning signs I put here that both on these last two drives to higher prices, we had an RSI that could never get above 60. So there was some warning signs here for this drop off. I wasn't a Meta owner before, but I can't resist this level here that it's trading at, and just added some more just a few minutes ago. And then in the video, I showed a couple of trend channels. One was a 5-year trend channel. We are dropping out of that trend channel at the moment, so that's a bit concerning. This isn't 5 years. This is only 2 years. I have it on 5-year data range, but the trend channel only goes back to 2022. And then the thing I want to really make an update on is in my original video that I had yesterday, I had this trend channel drawn right here. And after I published the video, I got thinking there is a much better lower side to this. It's not at the two lows. So here with this trend channel, we're only connecting two lows. So let's actually move that up to about right there. I think this is a much better channel line because it is tested here, 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 here. So we have at least 4 or 5 points that it's touching. So this is a much better trend channel. So if you watched my video yesterday and you heard me talking about it here, this is a much better line to look at. So I'm not going to save that because I already saved it. But the thing I want to point out here is we're still at the upper end of this trend channel. Even though they've fallen, they're still trading at the upper end of the trend channel, which they've done basically since February of 2024. They traded there pretty much 2020 through 2021 as well. So anyway, I wanted to correct that and make sure everybody saw the new trend channel because I think this is a much better fit. So thank you for letting me do that.
Thank you, Daryl. Excellent work again. Thank you. All right. So we covered Meta. Now we've got a question from Tomas, and his question is, what small caps am I looking at recently? And I gave it some thought, and there's probably about 6 or 7 small caps that have caught my attention for one reason or another. But the two that beyond getting my attention, they're getting my capital is Oscar Health. We talked about that one at length and where we think that one's going. The other one's eToro. eToro resembles Robinhood, Charles Schwab here in the US, but they operate mainly in Europe. For some reason, they haven't gotten a very warm welcome from the market after they IPO'd. That is typical. IPOs tend to sell off and then they rise. Now, they announced their earnings, and before their earnings, what was interesting, the stock rose before the earnings and then it settled down. The earnings were really good. So, like, what gives? The earnings really put up some good numbers. So, what's this market thinking? It's growing really well. The trading in Europe is really high, and that's good. They're doing crypto. Now, that was good when they announced earnings, but over the last week, it hasn't been all that hot. I don't know where crypto's trading today, but crypto's kind of been pretty much on a downward spiral. But those are the two that I would put out there that are getting my capital is eToro and Oscar. Of course, this is never financial advice. You're asking me a question. I'm answering your question and providing my research on these stocks. eToro is expected to continue to grow and become larger. I believe that the stock market's going to continue to attract retail investors. And, my experience with professional money managers, I did have a professional money manager. It must be 15 years from now, and I thought my performance was going to improve. I was like investing my own stocks, and I'm like, hey, this person, he does this full time. He's going to be better. And the end result was performance went down and my fees went up. I'm like, well, that's exactly the opposite that I want. I don't want to be paying somebody for marginal performance. In fact, underperforming. So I quit that. Well, I think a lot of retail investors are realizing that, everything's there online for you to research companies. Even if you used a professional money manager, I think you could have a better conversation if you're well informed, if you do your own research and show up to a meeting and say, hey, I own 10 stocks and here's what I think. What do you think? And have a real positive conversation, or I should say a productive conversation with that money manager. It's just going to make you better if you put your time and energy and think about your stocks and research them and really get to know your stocks. So the two that I think are worth putting my capital into are eToro and Oscar. Do your own research and make your own decisions, but that is the answer to your question, Tomas. All right, so what's going on with the stock market? Let's take a look. So we have the S&P up 0.72%, the NASDAQ up 1.5%. Russell, go small caps. It's a little early. This one tends to go all over the place in the first hour. So that looks real positive. And when we look at the heat map, looks like Google land continues to just be on that. The party continues over at Google. And Tesla's catching a really nice bid. Broadcom is as well. Apple going up higher. Palantir is going higher. The whole semiconductor support space, this is all doing well. Hardware companies doing well. AMD up nicely. Micron's up nicely. So the tech space, Google was put in communication services, but we know that they're pretty much a tech company. Amazon's up nicely. And over here, it looks like Unitedhealth is kind of fading from its initial rally. Elevance looks like it's really caught a nice rally. And biotech and other spaces are doing well. Walmart's catching a bid. And consumer staples, for the most part, are being sold off. Energy is being sold off today. So that's what's going on with the heat map after the first 15 minutes of trading. So investors woke up and they started buying semiconductor outside of NVIDIA. take a look at the scoreboard of the most valuable companies on the stock market. Looks like Nvidia is still the most valuable company on the stock market, and it's having a good year, but it's had kind of a rough month, right? Even, I mean, their earnings were excellent. It's like, man, uh, the market just looks at that stock and it's it's priced expensively, but I'd actually argue that right now it's probably fairly priced. So if you think Nvidia is going to continue to be an important company in the future of computing, AI, you know, it's fairly priced at this time. Apple, Apple continues to be a $4 trillion company that continues to be less relevant. It's like all the big conversations we're having in the stock market, like, oh, where's AI going to go? Hey, what's going to happen here, tech related? Apple's always like outside of that conversation. It's like, when are they going to become relevant again? I don't think they have a product to become relevant. It's not like they're on the cusp, but impressing everyone with something. One example that I'll point out is Google pulled off Robotaxi. They have Waymo. Done. Apple was trying to create a car. It was going to be a car that'd be self-driving. It was going to be a car that was going to participate in potentially a robotaxi industry that I think is going to be something, right? And it's becoming real day after day. Well, they weren't able to get there. They didn't have a founder in Steve Jobs that was relentless. And, based on some stories I heard, having a founder that's relentless is both positive and negative. It's positive because your company just becomes more valuable, but it's negative that it's quite hard on the employees. But Apple failed at getting the next big idea out the door. They pretty much wrote off that whole investment. And that's an example of how less relevant Apple's getting. A company that's really gone up in price and it's enjoying a moment, I guess, is Google Alphabet. They're up 67% year to date. This is a $3.82 trillion market cap company. So 67%, just trying to do the math in my head real quick, that's easily over $1 trillion of new capital that's gone into Google this year. That's a lot of investors co-signing that, hey, I think Google's a good business. And a lot of super investors, I did a super investor video over the weekend. I released it to advanced members of the channel. Hopefully you enjoyed it. And I reviewed the top super investors as well as the bottom. I wanted to go over the best and the worst. And the best performing super investors, they owned Google. They owned Google Alphabet. And looking at where they're at today, Google's likely going to continue to rally to the end of the year and into 2026. I've said this before and I'll say it again. And I said it a year ago. I said it, when things didn't look as obvious. I think Google is going to be the most valuable company on the stock market. And when I said it a year ago, I said in the next 3 to 5 years. Now I'm willing to say within the next 2 years, I think Google Alphabet will be the most valuable stock. It's just their business is so darn excellent. Google search continues to grow, super high margins. YouTube continues to grow faster than any other streaming service in the market. It's also bigger than our friends over at Netflix. They're so darn good that Netflix will not put the YouTube name on their earnings, on their investor letter. They just put it in the category of everything else. We don't want to tell people how good Google YouTube is. So loaded business with search, loaded business with YouTube. Their Google Cloud business is doing great. And what's being revealed, and the market's liking it a lot, is Google a while ago started to design their own semiconductors for Google Cloud. They started designing semiconductors for AI. So it's not necessarily to go head to head against NVIDIA. I don't think anybody can perform like the NVIDIA GPU. But as we get to the next phase of AI, inferencing, inferencing doesn't put the type of compute load that building large language models does. And the inference phase of AI now, Google's semiconductors are lined up well for that phase. So their Google Cloud business is really, really in good shape. So those are the three big pieces of Google. And then they have a bunch of little pieces that are really valuable. Robotaxi, it's real. I was driving through LA Saturday. They're all over the place. Los Angeles. And I was behind a Waymo for a while. And I thought, hey, let's follow this Waymo for a while, see how it drives, see if it drives slow, see if, because Los Angeles traffic is probably not as bad as New York, but it's pretty bad. And my wife commented, she goes, looks like the Waymo is driving aggressively, like you have to drive in Los Angeles. If you're polite in Los Angeles, you're going to turn a 15-minute ride into a 1-hour ride, because no one's going to let you into a lane. Nobody's going to let you make a right or left turn. And the Waymo is mixing it up with traffic quite nicely. So it's really learning. So we followed that Waymo, and they're all over the place. They're opening up new cities. In California, they're on the freeways, highways, which is pretty interesting. And I saw a Waymo on the freeway. I was cruising at 65, 70. It was cruising at 65. I'm like, look at that. There's a robot on the freaking freeway. Here we are. And that's all Google. So they've got, I think, a lead in robotaxi in the US. And we'll see if they go international with that. And there's other businesses that they're very good at. Of course, they've got their Chrome browser. They have their suite of apps, which I use and I prefer over Microsoft's suite of applications. Instead of using Excel, I use Google Sheets and down the list. All those things are there. And with valuations of software companies are really low priced right now. Google acquired a cybersecurity company a year or 2 years ago so they could be stronger with cyber. Good idea. Maybe Google can acquire some of these. Heck, maybe Google could acquire Adobe. That'd be a good acquisition. Or they could acquire some of these software companies that are so darn low priced with great value, great margins. So Google is really destined to go higher. Microsoft's kind of hit a plateau. They were off to the races early in the year. They were like up 25%, but they've kind of hit a plateau. Amazon's been a sick puppy trying to get well. I think this is the dynamite best stock I can put capital in right now. Amazon and Alphabet. These are the two most powerful companies on this list, in my opinion. And they have the ability to go along, when is anybody going to touch e-commerce by Amazon? Never. When is anybody going to touch the size of their cloud business? Not for a long time. They have such an advantage. So the advantages that Amazon has, as well as some of these other businesses that they have, like Anthropic, they're part owners in Anthropic. They have, they also have a robotaxi business. It's not quite as far along as Google's, but it's there. So I'm betting a lot of my capital on Alphabet, Amazon. Broadcom, I think, it's gonna have a day of reckoning, because I do know that stock quite well. I was an owner investor, And it surprised me how high it's gone. But I think that the type of semiconductors they produce don't have the competitive advantage that NVIDIA has. I think over time, the competition is going to increase, and Broadcom is going to see lower sales and lower margins. Meta's a good opportunity. They've been sent to the principal's office. They're going to make them like Bart Simpson right on the board. I will not overspend on capital expense 1,000 times and see if they learn their lesson. Tesla, I don't know about Tesla. It's an overpriced stock in my opinion, but some investors love it. TSM, I've been buying into TSM. The pricing on TSM's really come down, and it's a kind of a long play on semiconductor, but it's priced well, so I've been buying into it. And then Berkshire, I'll end on Berkshire's. Berkshire is just a steady Eddie. It belongs on the list, but I'm not putting capital into Berkshire. I think that's the right investment for somebody else. All right, so those are the big caps. Any thoughts on the big caps, Daryl?
Yep. So I've been buying Google. The chart on this one has just looked incredible. We've looked at this one several times, just breakout after breakout after breakout. And they consolidated here for a couple of months and then began rising in a breakout, and they've consolidated, looks like, for the last 3 weeks, and we have another breakout today. So this has just been a powerhouse. And I'm also adding to Amazon as they go as well. I think I added some last week. I don't remember exactly which day, but they're doing pretty good today, up 2.25% or so. Any other charts you want to look at?
Not yet. Let's see.
Okay.
Let's see what people want to take a look at. I think we've gone over the stocks that come up that members have put out there. Any other stocks you guys want to look at this morning? Feel free to put them in the chat. We can take a look at them. Looks like Oscar is still in rally mode, and Unitedhealth is kind of faded a little bit. Man, Astera Labs. Go Astera Labs. Holy smokes. I showed you Oscar and how Oscar is like, you don't want to own Oscar if you don't want a little action. And same thing with Astera Labs. If you don't like roller coasters, do not touch Astera Labs, because this stock is you gotta buckle up on this one too. This one's going to take you for a ride. But overall, it's been a success story if you buy at the right time. If you buy at the right time, you're going to take the elevator up, and this thing really rocketed up. I think the semiconductor rally is happening because the data center is still going to get a lot of revenues. And with regards to Astera Labs, they do have a differentiator, which is they have the best semiconductor to have two big clouds communicate with one another. So if you have a big workload at Microsoft Azure, a big workload at AWS, Astera Labs helps those two big workloads, those two big systems communicate with one another, which is a big necessity. And as we have data center builds that are massive, these guys are getting massive, huge increases in revenue. So this one here is catching a bid today, and it's priced a little too high. If I look at my analysis, Astera Labs was getting down to a good buy price, but then it went higher. So I needed it to get to about $120 per share, and it's not going to do that. It's going up, and it's at 149. So I'm just going to sit on my shares and be a happy camper on Astera Labs. Can you make any sense of the Astera Lab chart, sir?
Well, they are on a bit of a downtrend here. Lately, the 50-day is declining. The 20 days declining. The 200-day looks like it's still rising with the days open. The 5-day is rolling over. The RSI is strengthening, although it is still in bearish territory. The PPO is also in bearish territory. Looks like in another day or two, if this price action continues, we could get a bullish crossover. They've been under some distribution here recently as well after peaking out on October the 2nd. So it doesn't really explain the volatility necessarily, but does show you what people are, how they're spending their money at the moment. Looks like they were at a pretty good support level. My mouse just rested there, but I come back over here and that looks like it was tested there as well. So it looks like it was at a pretty good support level.
Got it. Yeah.
Last week.
Look at that. Interesting. And you know what's healthy about these pullbacks, and this was a little pullback of 5%, is it does kind of let some of the air out of the bubble, so to speak. And prices do come down. They make stocks a little more attractive to that investor that was looking either to add or to get into a position. So having a 5% drawdown behind us makes it a little more comfortable to see this rally. Like, okay, I can understand this rally happening. And your charts are kind of sharing, I think my vision is aligned with your charts.
Yeah.
All right. So we got a couple requests here. The first one is let's take a look at OWL. And then Mike wants to kind of do a flyby and see why the heck ELV and UNH are dropping. So we'll give that a little bit of time to stew and see what the heck's happening with those guys. See, but for now, let's take a look at OWL. And OWL is, they are an alternative asset manager in the United States. The company offers permanent capital-based solutions that enables it to offer a holistic framework for capital solutions to middle market companies, large alternative asset managers, corporate real estate owners, and tenants. So asset management, like private equity kind of play. And these guys, it hadn't been a fun ride with these guys. I think lower interest rates will have an adverse effect on the kind of the deals they make will have a less implicit rate. Like if they do a deal, maybe when interest rates are high, they're like, cool, we're going to make 10, 12% rate of return on that investment. With low interest rates, especially since the forecast for lower interest rates in the future, maybe now they're going to make 6, 7%. Well, that's not as great. That's just, you can buy bonds and have that type of return. Their dividend looks really darn good because their stock price has been coming down hard, almost 40%. So this one here is kind of a situation that they're caught in a very big move, interest rates being humongous, right? I think interest rates are going to be lower in the future, especially in 2026. I don't know if we're going to get a rate cut in December, but I can imagine the future with lower interest rates. And that isn't going to help Blue Owl. It's going to make their business less attractive. They have been growing nicely and are probably discounted. They're probably left, as an undesirable stock. My concern with it would be if I buy now, am I going to have to wait a year or two before it starts to move higher because of the big picture, right? So that's the apprehension I have with a stock like this is it's going to be a while. The valuation I have on OWL, let's take a look at that. I think they're discounted by 17%, which is not compelling to me. It's like, just not enough there. And if I understand the big picture is a big concern. So I wouldn't be investing in OWL. I'd go find something else that's probably going to work in a low interest rate environment. For example, real estate, I'm beginning to buy into CTRE. It's a stock that I own a lot of shares in. I have a lot of capital tied up there. It's been a great performer. I think it's going to continue to do better. And if you lower interest rates, they're going to do even more revenue. They're going to do more deals. So I'm going directly into real estate and seeing if that might be a good place for my capital. What are you thinking of OWL, Daryl?
Yeah, they're definitely in a downtrend. I've never owned this one. I have owned OBDC, which is managed by OWL. So that's their business development corporation. That OWL is the external manager, but I've never owned this one. We do have a 200-day that's declining, 50-day that's declining, 20-day that's declining, and they're in the reverse order. That's usually never a good sign. If we draw a trend line here, it's going to be pretty obvious which direction it's going. But we'll go ahead and put one here. So that looks like it's about where your fair value is calculated. I went and looked at their book value real quick. I had it pulled up. Oops, I want their financials, balance sheet, and the book value is only $3.45. So when I went to the summary page, I also saw this big old warning here from Seeking Alpha. They're at high risk of performing badly. So anyway, not too attractive to me. And I sold out of ODBC quite a while ago. I prefer ARCC instead.
Mm-hmm. Yeah. Interesting. All right. So are you done on this one?
Yep.
Perfect. All right. So let's handle a question that Mike had, which is, so Oscar's really moving up 23.81%. Whew, that's incredible. One day. And what's funny is before the market opened, I looked at the 1 year and it was down by 20%. And now the 1 year, they're up 4%. Year to date, up 23%. So it's a pretty good rise, and the chart hasn't caught up because it's at 1348. So it should be way up here. So this one here is continuing to rally. Unitedhealth is selling off a little bit. So it's kind of settling down. So maybe Unitedhealth isn't going to be as positively impacted by the news that's coming out of Washington.
That's my assumption as well.
Elevance is going up 1%, and over the 1 month, it's had its down days, but it's not too far down. Like I know Unitedhealth is probably sold off more than that. Now, the difference between Unitedhealth and Elevance is really name recognition. I think that Unitedhealth has greater name recognition. It has a discount that's very compelling to me. Elevance has, even a more compelling discount, but I would rather put my capital into Unitedhealth because I think that one is going to grab, and it ended up happening. More of the market's attention, these famous super investors bought into Unitedhealth, and I think I'm going to do better with Unitedhealth. But I can't argue with an investor going into Elevance. I think it's a terrific business. It's not quite as big as Unitedhealth, but it's discounted. So hopefully both continue to rise over time, continue to catch a bid. What are you seeing for Elevance on the charts?
ELV, okay. We may have looked at this one before. Let me go see if I have a saved chart. It does not look like it. Okay, so we'll look at it this way. So they also have a declining 200-day. The 50 days flattened out. Looks like they come and tested that today, but they pulled back. The 20-day is declining, as well as the 5-day. Let me step back just a little bit more, see how long this downtrend has lasted. And you could see where I would draw a trend line across here, and that's what I'd be waiting for on a breakout, much like we're doing with UNH. There's those downtrend lines that we looked at, and I like to watch for breakouts above those. I still think 312 on UNH is still a good buy price, and that's where I'll pick up some more shares. I think it could easily touch that. I don't know. Maybe I should go ahead and just draw the trend lines real quick.
We have time. If you don't, we wouldn't mind.
Okay, so I'm gonna maybe provide a little bit of learning here. I can connect this to that point. That's connecting only 2 points, but if I drop it down just a little bit, I can connect at least 3 points. So this would be a better trend line than the original one that I drew there. So just as a teaching moment, that would be a good place to draw the trend line. So let me save this real quick. Let's just go ahead and leave it like that for the moment. So it's looking a little bit like UNH, where it's come up and tested the trend line at least once recently and got rejected, tried to move back up, never could break an RSI of 50. It's trying to get above 50 as we speak, even with this increase of 1.33% that it's sitting right at the 50 line. The PPO is still sideways at the moment. Money flow is negative. So for me to get really excited about this one, I would need to see a sustained breakout above this downtrend line, which is currently be about 347 in the next day or two. And by the end of December would be closer to 337. Does that help?
It does.
Okay.
Thank you, sir. All right. So thanks to stock analysis, we're running a contest to see who could guess the closest to the NVIDIA price on 12 a.m. last night. So it looks like at Blessed Days won the pick. Congratulations. Hopefully you enjoy your free 3 months access to stock analysis. Stock analysis is the tool that I've used for a couple of years, and it's not that they've paid me any money to do so. It's just that I find it to be very useful, a lot of good content, it has everything that I need as a fundamental investor. It doesn't have all these advertising pages, which, if you put hours into your stock analysis per week, those ads could really add to fatigue, so to speak, because they're just popping up and trying to get your attention. Stock analysis doesn't do that. It's just nice, clean user experience. So I've really liked it. And more recently, they've offered up a way for me to become involved. And if you start using stock analysis, use the referral code that I have out there. I'd appreciate that. And congratulations to Blessed Days. Hopefully you like that experience on Stack Analysis. All right, so coming back to the stock market, looks like the market is having a good morning. We're 45 minutes into trading, and we've got the NASDAQ just going nice and high. And we've got which stocks are making it go higher. So it looks like Meta's joined the party, the go higher party. Google, geez. People woke up this week wanting to buy more Google, huh? Jeez. And Broadcom. People are buying Broadcom. Palantir's going higher. Palo Alto, CrowdStrike. And you know, the one stock that was sold off by Chase Coleman, CrowdStrike. Chase Coleman was in my video that I did yesterday, and he's really good. He was number 2, and he sold CrowdStrike. It caught my attention. The semiconductor equipment and material space is doing well. And you know, ASML came down to a good price, and I started buying the ASML very quickly. Now I'm sitting on a nice little position of ASML. Now I'm buying in a TSM. And it looks like all these companies are going to be buying or ordering a lot of semiconductors to be made by TSM. Amazon going up higher. Very good. And the healthcare space is going up higher. Pfizer's going up higher. That's good. Now, today is going to be a pretty good day for me to pick up some shares in Procter & Gamble. And we'll see how Colgate-Palmolive are trading. Those are 2 stocks that have been, on days like this, I tend to buy those and just kind of sit on some safe stocks. That way, when everything else is crashing, I could look at those stocks and say, all right, those are doing fine. And they pay me a nice dividend. So I could have like a bottom that isn't too far down. I can have some type of diversification that helps me maintain a good rate of return year after year, no matter if the market's going up or down. In 2022, I outperformed the market substantially, but I was still in the negative, but I wasn't as negative as the S&P. And I think that year, Warren Buffett killed the market, just crushed it because he was in the right stocks. So I know that Warren Buffett isn't looking great this year. Back in 2022, he looked like the genius he is. And he loads up on all these safe stocks at the right time. But he's also in Google now. Warren Buffett's putting himself out there, and it's probably helping him out a lot. So go Warren Buffett. All right. So looks like we've covered all the stocks. We've covered all the headlines. Any other topics that you can think of that we should cover?
Nothing on my list at the moment. It will be a pretty light week. Volume wise, the market will be closed on Thursday in the US, and it'll be open only half a day on Friday. So it'll probably close at 1 p.m. Eastern time, if I were guessing. So we got 3.5 days of trading.
Yeah, and I think then in December, we're also going to see some selling for tax loss harvesting. And, you know, it's that one's hard to be like predictive on, but I imagine it's stocks maybe that underperform, like it Nova Nordisk, right? I could see investors selling that off to take that tax loss or that loss and then use it in their taxes because they have another gain to pair it up with. So we may see some of that. That's typical toward the end of the year. And I think that happens kind of now and in early December, and then we rally into the end of the year. So that's my observation. All right. So I'm seeing some requests like Best Days, Mondelez, and then some others. And I'm not ignoring you. In order to make it, kind of rational for people that pay to be members of the channel, I put a rule out there that if you are not a member and you come on the stream and you'd like me to look at a stock, you buy a $5 super chat. And I put the way that you could either become a member or you can buy a $5 super chat, and then we can look at your stock. So I see your chats. Thank you so much for joining. But those are the rules of engagement on the stream. Hopefully you understand. Looks like DJ, how you doing today? Let's talk a little Costco. I got to get to Costco this week. My family assignment is I got to get pies at Costco, pumpkin and apple. And they make these giant pies. Are you familiar with the pies at Costco?
Sure am.
They're like the size of a pizza, and they're delicious. Yep. So I'm going to have to I'm going to earn some hazard pay, and I'm going to go to Costco this week. I'm going to have to elbow some people. I'm going to have to elbow my way into the pie section, grab my pies, and try to get out of the store without spending $200, which isn't going to happen. I'm going to spend $200. Let's take a look at the stock because DJ wants us to analyze Costco and see what's going on with this awesome retailer. They have a way of doing business. Best Days became a member. Thank you, sir. We're going to handle Mondelez next. Thanks so much for becoming a member. Appreciate it. I'm going to handle Costco, and then we're going to go to MDLZ. So back to Costco. So Costco hasn't had a good year, but this is a brand, right? This is one of the there's some companies that have such a great reputation and just are culturally, like their company, they're such a good business, right? Costco's in like that category. They're just a good business. I like shopping there. Like most people, don't necessarily like spending money, but with Costco, it just seems like you're always getting a good deal. People feel that way about them. I certainly do. So market cap, $396 billion. And the question we're trying to answer, what would be a reasonable price? So that we're going to land on that, DJ, but let's kind of go through the motions here. PE's a little high. So it's Costco, but this is a high PE because they're a retailer. Retailers don't grow very fast. These guys are growing faster than their rivals, by the way. I mean, Walmart's been rallying higher. They don't grow 8%, but they have better margins. Target is beginning to rally, by the way. That was one of the stock picks that I put out there over the last week or so. I started to buy Target. It's beginning to rally. And Costco here, they've been getting it done. Look at that. Look at that performance. Good job, Costco. And their margins are really thin. They make a lot of their money on the membership program, which is almost all margin. Because overall, what they have as a brand, and the reason they have so much darn loyalty is that I know when I shop there, I'm going to get a good deal because they don't mark up their product. They give you a very good value. They have good product, good quality product. All right. So what are analysts thinking Costco is worth? They base it mostly on earnings per share. And everybody believes it should be priced higher. This is 24 analysts covering it. They think it's discounted by 19% on average. They're going to keep growing. They're going to keep expanding their profit. And their PE ratio is going to come down to the mid-30s. So I give them credit for the brand. I give them credit for the model. I give them credit for the diversification. They make them, diversification. Differentiation of their brand. Their brand stands apart. I would say that they don't compete, but they're kind of put in the same category as Amazon. You're getting a good deal on Amazon. You can shop around on Amazon. So All those things I could accept a higher PE, but not in the 40s. 40 PE is just too high. I'll give you credit, but not that much credit. Geez, 40 PE, and I can buy Google at probably low 30s now. I think I'm going to buy some Google. So the answer to your question is I believe Costco is worth $607. It's being priced at $893. So we're a pretty good distance from a fair price. If Costco got to a fair price, I would entertain investing. But I think we're too far away, way away from their intrinsic value of fair price. And the market has been trading the stock with that particular thought that, hey, great business, but you already got credit for it. The value of your business, $395 billion. It's not like we're valuing you like Target. Target's $60 billion and they have a lot of revenue. So this one here would be a total sell, pass. Not going to be a stock that I'd entertain probably in the next 2 years. So what are you thinking of Costco there, Daryl?
I'll try to answer DJ as directly as I can here. So this is a 19-year trend channel. And then I've put a delta that just looks at the slope of this line. And that is 65.0% over 3 years. So if I take the price at the midpoint of this trend channel, 753, and I multiply that by 1.65, because that would be over 3 years. My 3-year target would be about 1,200. And if I use my valuation, which I'm about $10 higher than what Victor calculated, then if you multiply that number, you can just use his number because he showed it there. I'm very, very close. But if you multiply that number by 1.65, then you get a target of about $1,016. So that would be the low end, in my opinion. And the 1,200, in fact, let me just recalculate it and give you the exact number of what I'm seeing right now would be 1,470. So it's sitting in between those two prices probably in 3 years.
All right. So that is our analysis of Costco. Let's head over to Mondelez. And this is a new member, our newest member, Best Days. And before I forget, Best Days, please email me at victorhinvesting@gmail.com. And anybody else who's a member who hasn't done so, email me there. I put it in the chat. And then I'll be sure to get you a list of all the perks you get and sign you up for any perks you've signed up for. So please do that when you get a chance. Let's get into Mondelez International. These guys are a $72 billion market cap company. The stock hasn't been a winner for the last year. Now, this is going to be a food company. So this should do well when a lot of other stocks get sold off. 5-day, this one didn't perform all that great. But yeah, it's not looking good. 28th. They announced earnings. We'll take a look at what they announced, and the stock sold off. All right, let's continue on here. We've got PE ratios at 20.86 for the current year, coming down to 18.32 next year. Pays a nice dividend of 3.56%. It is a stock that analysts believe is discounted. Now, let's take a look at a couple of things. So let's look at where their revenue has been, it looks like it's been fairly positive over the last 5 quarters, growing. And this is a pretty big company. It's in a category that isn't going to grow really fast, and growing by almost 6% the last quarter. That wasn't too bad. Gross profit, they got a gross profit of probably about 30%. It's a food company. That's normal. So understood. When we look at their trailing 12 months growth, looks good. All right. Analysts, 18 of them cover it. There are some analysts that believe it should be priced much higher. All analysts think it should be priced higher. Collectively, on average, they think it's a 22% discount. They're going to continue to grow. This looks very good. And the expansion of profit looks very good, bringing down their PE ratio into the teens, mid-teens. Very good. These numbers look very good. Okay. So that looks good. Would you mind looking at the charts, and I will complete my valuation on Mondelez?
Yeah, I'm trying to get this annotated for you real quick, but okay, for some reason. There we go. All right. So I'll explain the method to my madness here real quick. So what I'm trying to find here is a good support and resistance line. And I've got a whole bunch of extra stuff on here I don't need. So what I found, I had to go back over a 10-year period to see where the line would actually be. And this is my best point at this point. So it found resistance at this line in 2020, October of 2020, and at the beginning of 2021. Broke down below that and then broke above it and came down and tested it once more. It almost tested it again in, let me go ahead and step out of here real quick. Let me save this chart too. Okay, so it almost came down and tested it in January of this year. So now that we know why that line is drawn there, and that's over at least a 5-year period, we can see where the line is. This is where it found some support. So the interesting thing is during the tariff announcements, they had a little bit of a drawdown, but while tech was going down, this consumer staple was up 21% over that same time period. And if you were here at the very beginning of the show when we showed the relative rotation graph, it matches that finding, because staples were way outperforming just about any other group during this 2-month period. So anyway, we do have an upward sloping 200. It looks like it came down and is moving back up, and I having a hard time explaining that since it spent so much time down here below the 200-day. I may have to go to my interactive chart to actually see what the slope of this line is, because it looks like it's moving up, but that's a little hard to explain considering all the time it's spent below the 200-day recently. The 50-day is definitely declining, and the 21-day EMA is also declining, and it's been underperforming that 21-day EMA since the end of October. It's finding a little bit of resistance on the RSI. Can't really get above 40 here since it broke down below the 40 line at the end of October. PPO is just traveling sideways. We do have a little bit of accumulation in the past week, but the money flow is negative. They have severely underperformed the S&P 500 this year by 20%. They're even underperforming the consumer staples sector by 7%. They are outperforming their own industry group, which is the food products industry group. They're outperforming by 5%, but that group overall is underperforming the S&P 500 by 23%. So I'm having a hard time explaining this 200-day moving average. It's really got me a bit confused at the moment. But I'm going to draw.
You want me to show my valuation and then maybe give you a few minutes to think about it?
Sure.
All right. So I just completed the Mondelez valuation, and a couple of things to note is their debt to EBITDA is a little high. It's up about 3.5, and that's above the 3 that I like to see, because under 3, balance sheet's okay. If you're close to 0, balance sheet's great. If you're above 3, the risk of the business is higher. So I'm using a higher discount rate. Their free cash flows are not great, lower margins. It's a food company. They have to put a lot of materials into their ingredients into their product, and they don't have a lot of cash, and they do have that debt that I was talking about. So that brings down their overall equity value in my book. And I think based on cash flows, Mondelez is priced 55% too high. And analysts really only look at earnings per share. That provides a nice discount. So I kind of agree with what they're saying. But this cash flow is more important to me than earnings per share. I use 2/3 of this to blend into my overall valuation. So this is priced 29% too high. This would be a sell in my book. Now, if an investor is looking for, which I am looking for, some good stable stocks, some lower risk stocks, and the stocks that have been getting my capital, Colgate Palmolive, I think they have a good discount. Not a wildly awesome discount, just a good discount. Procter & Gamble, I think, is having a good discount. They pay dividends. And Kroger has been a really good investment for me. It pays a dividend in the 2s, 2.5, has a discount. So there are stocks that are in consumer staples as a category that are, I think, investable. And those are a few ideas. This is not investing advice. I'm just providing what I'm doing and providing access to my research. Hopefully it was interesting to you. And thanks for asking about Mondelez. And thanks for becoming a member. You can come back and request other stocks. Hopefully I see you on streams often, and I appreciate you joining. And I've got a comment here on Mondelez. I think Mondelez's stock share price is strongly influenced by the price of cocoa. Could be. Yeah, because a lot of their product probably has that as an ingredient. Totally. Yeah. But yeah, some ingredients have gone up. I know coffee was also up. Did you have something to say, Daryl?
Yeah, cocoa prices are half of what they were just a few short months ago. So I'm an investor in Hershey, and Hershey is getting a bump on their price because the cocoa prices are coming down.
I know coffee was higher. Coffee prices, I think it was the yield that they were getting. They didn't have a good crop, and we saw coffee prices go up.
Yep. I have coffee on my screen at the moment, and it was at a high back in February. It's come down, looks like, well, come down to like $4 a share. And I can show you cocoa as well.
That looks
So,
much better.
yeah, Hershey was really hurting when the prices were up here, but now that the cocoa prices are starting to come down, and they've been down to
Mm-hmm.
at least the lows of the last 2 years, that they're starting to get a bump to their share price.
Thanks, Daryl. Good stuff. Well, it looks like the NASDAQ is going to party all day. We've been open for about an hour and 10 minutes, and the NASDAQ is having a good time. The S&P is having a good time. And when we look at the heat map, some of these stocks are having a great time, and especially Broadcom. Holy smokes, it's up 8.7%. That's a big cap. Palantir shaking off the strong sell-offs they've seen over the last 2-3 weeks, and showing Michael Burry that this is a good stock to invest in by many retail investors. I'm not an investor in Palantir, but I know some other people are. And it looks like the whole hardware, semiconductor equipment, materials area is catching a rally. AMD stockholders are happy today. Intel stockholders are happy. Micron, very happy. Very good. So that's the tail of where the market's going. If you're in these big green boxes, you're very happy and catching a really nice bid on a Monday. We'll see how it goes for the rest of the day. And like we mentioned at the beginning of the stream, the volumes aren't going to be very high this week. I think big investors, I don't think they have a strong game plan for the week where they're going to come in and do something quite spontaneous or exciting. Or maybe they would. Maybe it's a good week to sneak up on the market. But we'll see what happens. Historically, that just doesn't happen. All right. So I think we've gotten through the chat. Thanks again, everybody, for joining. Thank you, Best Days, for becoming a member. And everybody, have a terrific week. Have a nice, smooth week. Enjoy today's gains. Enjoy some time with family and loved ones on Thursday. Our streaming schedule is a little different this week. Daryl is not going to stream with me on Wednesday or Friday. He'll be back next week. And I'm going to try to stream on a solo mission on Wednesday and also on Friday. So look for the update there. We can go over some stocks and see how that's going. And also try to stream in the evening. So look for that as well. I'm releasing videos to paid members. So just about every day I release a video. Hopefully that content is interesting to you. And a month later, I release it to the public. So if you'd like to see content released, consider being an advanced member. That's where you get most of the content. If you're a super member, and I know it's a little expensive, you get access to everything, every video that comes out. But advanced members, I think you could see quite a bit of videos just about every day. And the public will see them like 30 days after. Anything going on with your channel for the remainder of the week?
Well, I did publish the Meta video yesterday, and what I was thinking on that one. So if you haven't seen that one, I see they're up about $13 a share right now. So that purchase I made this morning is doing pretty well. And HP will be reporting tomorrow after the bell, and I intend to put together a video on them before they release earnings.
Excellent. Look forward to it. I bought some HP ink for my printer, And boy, they give you the printer for free because they want you to come back and buy that ink for a
they sure do.
pretty penny. So I don't print a whole lot anymore, but I don't know, once a year, maybe twice a year, I go buy that print, the ink, and $120.
Yeah,
Man.
it's very expensive. The printer is disposable for them.
Yeah, they'll give it to you at cost,
Yep.
or
Yep.
they want you to buy that ink. All right, well, that does it, everybody. Thanks for attending. I appreciate your attendance, and good luck with your stocks this week. Looks like the market is having a happy morning. Let's keep our fingers crossed that it continues along those lines. And I'll be streaming tomorrow afternoon, probably evening, and I'll put out the notice as soon as I can. All right, everybody, have a terrific day. We'll see you.
Take care, everyone.